Robert, welcome to the program. I want to start by just having you walk me through what you guys do, because when I look at the description, I'm an engineer and I have trouble figuring out exactly what it means, so I'm sure my viewers could use some help. High performance field programmable gate arrays and embedded FPGAs. What does that mean?
Well, that's a complex thing, but it's actually relatively simple. We're a fabless chip manufacturer based here in Santa Clara, and we build a series of what are called programmable chips that are aimed for data acceleration. So we're a fabless chip company, and we build chips that go into infrastructure equipment.
So not to immediately compare you to competitors, but when I hear about field programmable chips in particular, that takes me over to a public company folks have been buying up like crazy over the last year, Xilinx. Walk me through how you are carving into this market that I know has been a huge growth avenue. Where do you sit compared to other peers in terms of size and client base?
So yeah, we're still relatively small, but we're obviously growing very, very quickly. And what we've done is that we're innovating in our products in two areas. First of all, we're building a series of high-performance chips that go into computer acceleration. So they would be used for things like artificial intelligence and machine learning. These chips can also go into the new wireless 5G infrastructure. They can help with high-speed communications. And then more recently, we're seeing some exciting opportunities for our products that will go into autonomous vehicles. So some very broad applications for our products in some high growth end market applications.
Okay, now your path to the public markets is basically coming to fruition as we speak right now. Yesterday, you announced that you'll be listing on the NASDAQ through the merger with ACE Convergence. ACE-V is the ticker for those following along. Now, in terms of timing for this transaction, anticipated to close by the first half of this year. So when I look for some of the data that I normally want from a public company, I have a little bit of trouble finding some of it on you guys. So hoping you can help me out, Robert. Can you walk me through right now the breakdown of revenue for those segments you just described, the high performance computers, the cars, and the overall breakdown of where those revenues are coming from?
Yeah, so as you look at our products, what makes the company very unique is we have two classes of products. One is a high-end chip business where we sell and manufacture our chips with TSMC. The second piece is we also license our IP. So companies that also want to manufacture their own chips can take a special piece of our acceleration technology and put it into their own applications. And that's very exciting because we're leveraging the R&D teams of many companies outside ours. The second piece that I would say then is from an overall market standpoint, we expect that those key applications of AI, ML, 5G wireless, networking, automotive, that's going to be a very balanced portion of our revenue. So you'll see each of those key segments driving our long-term revenue growth.
Now, from what I did see, the relationship with Taiwan Semi and it stretches back over a year as part of their alliance program. Can you walk me through, and viewers, the details of how that works? Do you have a specified period of time in which they are obligated to purchase a certain amount of your chips? Is it a quarterly thing, or is it a product-specific thing where you're coming to them and saying, hey, how many of these do you want to buy? Or is it already licensed and you know that you have clear cash flows?
So two kind of pieces of the business. One is obviously we build these standalone chips. Our brand name for those is Speedster. And so we sell those into all of the marketplaces that I mentioned. But this licensing model is unique. We're the only company in the world to offer this licensed IP technology. And the way that works is a company who has decided to build their own chips for high volume mission critical applications would then come to us, and we would license them a piece of our technology. They would build it into their chips, and they would then manufacture that at TSMC as an example. Now, what we've done is that we've made sure that that technology is highly manufacturable. And in fact, over the last few years, we've actually manufactured more than 10 million cores of our speed core technology. So this is a high manufacturable, high reliability solution that goes into infrastructure mission critical applications like wireless 5G.
What are your priorities as a public company? Do you need to spend and expand? It sounds like you have a pretty good amount of scale already. Do you need to build factories, hire people, or is this about shoring up the balance sheet?
So I think the exciting part for this merger with ACE is that the result of that is going to be about up to about $330 million of additional capital. What we expect to do with that is to accelerate our product development. That means more new products. That means expanding our reach of technology for our IP, and then really expanding our worldwide selling and technical support organization to really accelerate the adoption of our technology. That's really what we're going to focus on.
Robert,
what I would say,
Yeah, I was just going to say, sorry, because we only got about a minute left here, but I wanted to make sure, just to be clear on the bottom line, are you profitable right now? Can you give me an idea what you expect over the next year? Not in terms of numbers ahead of any investor events, but just generally kind of the path that you expect, revenue versus profitability, top line versus bottom line?
So we just finished 2020, record year for us, 105 million, 79% gross margins, 35% operating margins. So although we're a semiconductor company, with those kind of numbers, we look a lot more like a software company. And we expect to, our long-term model is continue that growth rate at a 20 to 25% revenue growth, and have somewhere in the range of 70 to 75% growth margins on a long-term basis. So this is going to be both a growth play and high profitability.
To that point, follow-up, last thing is the clarity for that growth rate there? Is it secular growth that can move independently of, say, lockdowns, not lockdowns, all these macro back and forth things people are wondering about the overall economy?
What I think is this, is that we're going into a very unique capability for the use of these kind of technologies. The company is relatively small right now. The market opportunity that we see is about $10 billion over the next 5 years in front of us. And we think that that's going to give us a lot of room to grow as we innovate and bring out an exciting range of new products.